Nvidia is currently the biggest company by market cap in the entire world, and they have earnings in about 3 weeks, which is why I'm gearing up to trade options on Nvidia and make a ton of money like I just did on Tesla. This is the perfect time to buy and to sell options. This is a very unique opportunity. So check out the CNBC clip on how I'm going to be playing earnings.
Great to see you. Nvidia doesn't report until kind of late-ish November, but of course we have so many signals this week, right? With CapEx from some of the Mag 7, what do they need to show us to keep the Nvidia party going?
Look, they just need to show us that demand is there and strong and ideally growing, right? I mean, the big concern there's a number of concerns when anything runs this much, but I mean, the biggest concern has just been sustainability. Like the numbers have gotten so big so quickly, you just worry that it can't keep going. And like, as of right now, from everything we can see, it looks like it's still going. Like I get the nervousness. It clearly is not time to worry this year. I don't even think it's time to worry next year. We'll see as we go farther out. But I think at this point, they just need to show that demand is strong and growing and accelerating. And at least from where we're standing right now, everything we can see, things look pretty good, I think.
Right. Stacey, I want to ask you about the story that Seema was just talking about, and that is the idea that Trump especially, but perhaps both candidates would crack down on manufacturing of chips inside of the U.S., but what we've seen from TSMC versus what we haven't seen from Intel. Sort of talk about that and what it would mean if TSMC wasn't able to ramp up here in the United States.
I mean, look, I'll be honest. So I heard Trump's comments as well, and he was, what did he say on Rogan? He said he didn't like the CHIPS Act. He wanted to replace it with tariffs. Yeah. I mean, it makes, look, it's Trump, so Trump is gonna Trump, but it doesn't make any sense, right? The idea that like Taiwan has stolen, quote unquote, our chip making abilities is ridiculous. Like that is not true. And like not allowing foreign companies to make chips on US soil, that is actually what we want. I mean, look, the whole like the idea that we are dependent on Taiwan and that is becoming increasingly an untenable situation is very true. And you know, we want to get leading edge infrastructure built here in the US. And to be honest, from a policy standpoint, it really shouldn't be mattering all that much who is building it. I understand why Intel is sort of named the national champion, but if the goal is really to get as much leading edge capacity built here as quickly as possible, we should be giving the money to the folks who can build it. And as of right now, that entity is TSMC. And you're right, you know, there was some news flow of last week that suggested that their yield ramp in Arizona is actually exceeding targets and maybe even exceeding what they do in Taiwan. There are no other players, neither Intel nor Samsung, that can make claims that anywhere near that. So if the goal is to build the capacity and get it here and installed and running in the U.S. to de-risk the supply chain, that's happening right now. And so stopping that would be a problem. Sure.
Have we given up on Intel then?
Well, we'll see. They report earnings on Thursday. I guess we'll see what they have to say. But I mean, clearly, you know, Intel's core business is under pressure. They're losing share and they can't rely on their own manufacturing right now. They're actually outsourcing more, which is impacting gross margins and everything like that. So their suggestion is that they believe their process roadmap over time is getting fixed. They're going to bring that volume back into the U.S. and it's going to make everything, you know, wonderful. I guess we'll see. You know, they had a day a few months ago where they were sort of giving out some targets for where they thought things could go over time, and it really was like a 2030 story. Right, even if they are on track, like it's a slog between now and when we would actually see things really start to improve. And as of right now, we don't actually know if they're truly improving or not. So strap in for Thursday, I guess. It'll be entertaining, if nothing else, I'm sure.
Yeah, we're not going to get Nvidia for a little bit, Stacey. But, you know, every so often you hear, and I'm sure you do it more than I do, well, there's, you know, a small company over here that's developing a next generation chip that's going to ultimately disintermediate or push Nvidia to the side. I mean, how long is their dominance, do you think, going to last?
Well, I mean, there's always somebody in the wings. That this is an enormous market, right? The idea that there's not going to be others trying to take a piece of that pie is ridiculous. Of course they are. Now, that being said, like NVIDIA's built up their position in silicon and hardware and software and systems and ecosystem over 10 or 20 years, right? And they put those moats into place. And so anybody that is trying to get in there, and I'm not talking that people can't get little bits. Clearly, you know, AMD and others are getting, you know, little bits, but to be like material in that market, you've got to like penetrate those moats, and it's a very, very difficult thing to do. And especially for a startup, I mean, when you just look at the amount of money that Nvidia has to invest in these things versus smaller, very small companies, it's tough. It's very, very tough. So at this point, I'm not terribly worried about some like young upstart coming in and taking a massive amount of Nvidia. So I'm not even really that worried about larger companies, larger competitors going in and trying to take a.
All right, guys, I want to show you my screen, my Nvidia position, and how I'm going to be trading this stock. So look, check it out. One of the first things, so look, one of the highlights here of the analyst Razgan, what he was saying is that Nvidia must demonstrate revenue growth for earnings. And I think that he's looking at Nvidia's demand sustainability. So when looking at the company's sustainability, you want to understand if the company is growing. For Nvidia, it's clearly and very, very obvious that it is a yes. So I'm expecting earnings to be very strong. And just looking at the high valuations, I'm personally not concerned. Nvidia has had high valuations for a number of years, yet their revenue growth is far exceeding what expectations are in the market. The market is an expectations game, guys. So taking a look at Nvidia, they're likely to beat expectations. Now look, the current stock price is right under $140 per share. If you take a look year to date at Nvidia, this stock is a clear momentum winner. Absolutely clear, okay? Now, if I scroll down here on Robinhood and I show you their earnings, check it out. Their earnings continue to go up. Like basically in Q1 of 2024, they barely beat earnings. I know it's kind of hard to tell. If I like scroll in there, you can see they beat earnings by a bit. They beat earnings by a bit in Q2, in Q3, in Q4, all right? They have beat earnings. And by the way, I think this is off just by 1 year because we're not in 2025, but Robinhood is saying we are. So I believe this is 2023 and this is 2024. So look, they beat earnings last period. This is last period. And the period before. Every single quarter that we get earnings, Nvidia beats. And every time it beats, it gives more confidence to the market. We have beat 1, 2, 3, 4, 5, 6 of 6 of the past earnings, okay? So coming in on just under 3 weeks right now, I am going to be trading options in a very smart way to make a load of money, just like I did on Tesla. I printed money on Tesla, literally printed, okay? Now, if I scroll up right now, you'll see a couple of my Nvidia positions. I'm essentially selling puts, but I think going into earnings, you actually want to buy call options, okay? This is something that I don't typically recommend, and I would say that obviously buying strategies can be a lot more risky, so I'm going to show you a couple of different variations of how I would be buying call options. I'll show you buying call options. I'll show you the poor man's covered call, which is buying leaps and then selling call options on it. And then I'm also going to show you so the bull call spread. So those 3 strategies. So I'm going to show you 3 strategies in this video. It's going to be filled with knowledge in this video. So I also want to just point out that the analyst was covering competitive threats for Nvidia's dominance. So he was saying that despite smaller companies attempting to enter the semiconductor market, he believes that Nvidia's extensive ecosystem, hardware advancements, and financial resources provide significant competitive moats for the business, which is extremely, extremely important. I can't tell you how important it is to have a moat for a business. That's actually the number one thing that Warren Buffett looks for is a moat. So look, one more thing before I show you some trades is earnings season is a really exciting time, but it's also a risky time. So I want you to be aware that you can absolutely print money, but it's also a potentially risky time because, I mean, there is a small chance that Nvidia might not beat earnings, right? So you just want to be aware that you don't want to put all your eggs in one basket. And asset allocation and having proper diversification is a thing that you do have to pay attention to, even though I am making a lot of videos here on Nvidia and Palantir, and I've printed money. Like my portfolio is gonna hit 4 million. Not this year because as we only have like 2 more months, right? We have November and December. So it's possible, but I'm probably not going to hit 4 mil this year, but I'll hit it probably in January or February. You guys, if you're subscribed, you've seen the portfolio just rise and rise, right? So look, let's talk about buying call options, specifically the strategy of when I would do that. So let's go to buy call. I'm going to go so look, we got earnings on November 20th. So November 22nd would be the expiration date that you would pick for capturing earnings, right? The call options are fairly expensive. I would probably go for something really close to the money, like the 140 right here. You can see the delta is 0.55. So it's an out of the money option, but the market expects Nvidia to go up so much so that the delta is 0.55 and it's out of the money. So that gives, that paints the picture that the market has a bias for Nvidia to rise. Like literally we have a bias for it to go up, because typically an out of the money option should not have a delta of over 50, because the market follows random walk. Random walk states that essentially the market is, it's not certain if the stock's going to go up or down, but for Nvidia it's pretty definitive that it's gonna go up, at least based on the option activity, right? So there's a whole lot of volume here. There's 3,000 contracts traded and almost 16,000 on the open interest. The implied volatility is pretty high. The bid-ask spread is pretty tight. This is a fantastic option to buy. So you can buy this. If you buy this call option, you'll have to pay about $1,000. It is pretty expensive, all right? So your break even here is actually around 150. But look, if Nvidia goes to say 160 by November 22nd because of earnings, then you could essentially double your money. I mean, that's no joke, right? Doubling your money in 3 weeks. I mean, you kidding me? I have a lot of students that have 100K, 200K, 300K portfolios and more. So it's potentially you can make 100K in 3 weeks. Now, obviously that's if you put your entire money on the position, which, I wouldn't recommend that at all. You gotta be aware of risk management. But look, you can buy a call. You can also sell a call. So I would still stick to the 140 where you buy the call. Okay. And then you can sell a call option. Let's go for, let's say that we think is going to go to 150, which is entirely possible. Here you can see how you can actually still double your money. And I think this is actually a better play in my opinion. So if you're going to be buying options, yeah, you can buy calls. You get really tremendous upside. So if Nvidia went to 200, you would absolutely print money on a buy call option. But I'm not really a kind of guy that likes to bet on big moves. If I can make 5% a month, then pretty happy, right? $3 million, that's like well into the 6 figures per month. Or even if you have, let's say 100K, 5%, it's $5 grand a month. It's really good, right? So I would say that I'm not looking for like a massive, like crazy move, but I'm still going to print money and make a lot of money by just basically, I can go for a call debit spread. So here in this example, you can buy the 140 and you can sell the 150, and the 150 essentially subsidizes the cost of the 140, right? So you're paying $985, but then you're selling a call option and you are collecting $535. So your total cost is only going to be $450, which is like half off, right? It's half off of buying a call option. And the craziest thing is you will actually double your money at 150 rather than like, I think in our last example it was 160. Right? Because your break even was 150 in the prior example. And to make a total of $20, you needed to go to 160 because the call was at 140, right? So you need to go to 160. Here, we only needed to go to 150 to double our money. So this is a lot easier to double your money. And this is probably more or less what I'm going to open up a small position on when the market opens up in about an hour. Although in an hour, I have a interview with one of my students who has been very profitable. So I'm going to grab a testimonial. I'm going to have a lot more testimonials on this channel, guys, because I have so many successful students and I haven't been posting their results, which I want to share more of their results. So definitely watch out for that. I'm going to have that pretty soon here. It's going to be in my wheel strategy course, which I'm coming out with very soon. So make sure that you have notifications on for that. Now, the max loss here is only what you pay. So whatever you pay is what you can lose. So I like that it's a defined risk. So this is a fantastic position. Now, something else I'll show you is you can also buy a leap option. Okay, so leap option is also a very powerful strategy where you just buy a call option that goes out far into the future. So let's say that we go for September 19, 2025. Obviously, that captures this earnings, next earnings, and the next earnings, right? So it captures in many earnings, and that is good because as Nvidia keeps beating earnings, it'll likely, rise. And as it rises, this leap option will perform very well. So if I expand here, this is a 68 delta. All right, the implied volatility is lower. The implied volatility is smoothed out over a longer period of time. So you saw that a shorter term call option was having a like 68, 69% volatility. It's a little bit more smooth at 53%. So this option, is going to be actually a little bit cheaper because when you're buying options, lower volatility is good. And that's why, after earnings happens, basically, there's IV crush typically. So right now we have higher implied volatility on Nvidia because there's earnings. All right, so you can buy something like this. You can buy a longer term call option and then you can sell calls against it. So you can go for, let's say I'm going to show you a little bit different of a scenario. So I can go for November 22nd, right? And now I can say, hey, I think Nvidia will go up, but let's say that you're only moderately bullish on Nvidia. You can actually now sell the 150 and say, I think Nvidia will go up, but I don't think it'll go up much higher than 150. You can see what happens here to the chart. Okay, so this has its pros and cons. There's no best trade to make in option trading. There is just strategies for your point of view, okay, if that makes sense, for your point of view. I would probably not do this strategy right here, but I'm giving you the option to because, not everyone is mega bullish on Nvidia. You can be slightly bullish on Nvidia and still make money on it in this way. If Nvidia goes towards 150, right, you'll make money on the leap option right here, so you'll make really good money. You can make, you won't double your money. So I would say that this position right here would probably be best done after earnings. I have several videos on the poor man's covered call, so I'm going to have that linked at the end screen here. So yeah, I wanted to show you the 3 strategies, but I would say the first 2 are going to be much better. The poor man's covered call you should do probably after earnings because the implied volatility will go down and you'll have less risk of getting a sign on the short call option. So if you want to check out the poor man's covered call video on how to do it properly, I actually have an Nvidia video on that, so check it out right here on the screen.